Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the small caps that were in play today. It was a big down day for the stock market. Yeah, a lot of stocks were under pressure. These are some of the stocks that did have a green day. If you check out XBIO, you can see it closed up 103% today. That was a huge move. It had a pullback on Friday. You can see here on Thursday there was this long upper wick form. The candles worked back into the bands after closing well above the upper Bollinger Band, and then EMA 4 support held that pink line. And so there was a bounce off that level today, and then there was another close well above the upper Bollinger Band. So what's going to happen now, it's got to push higher. It's got to get above the 725 zone. You can see there was a lower high made today. It needs to break above and make a new high and keep pushing higher. Now, if it stalls out here, the EMA 4 down here at 391 will be the key support level to hold. That's been holding since the breakout here. If there was a close below, that's when it could possibly consolidate and check out that 300-day simple moving average. Okay, so big volume, huge volume, 2 days in a row. Where is this headed? If we look here at the weekly chart, you can see that it's hitting the 200-week moving average resistance zone. That's 682. It hit that level last week and broke above it temporarily, but pulled back and closed below. And so this week, if it can close above that level, that's going to signal it wants to head higher. It is breaking above the 100-week moving average, the gold line down here at 314. So a weekly close above that level would be very bullish. It's breaking well above the upper Bollinger Band and EMA 4 down here at 389 and 357. So it's going to, the candles could possibly work back into the bands if it fails to get above that 200-week moving average. You could see this resistance zone right here. It'd be best if it could stay above 5 now that it's above $5. So this is a huge 2-week move. If it gets above that 200-week moving average, that would signal more upside potential. Okay, take a look at ABIL, another big winner today, closed up 100%. This is pushing super hard. You do have RSI at 93 and Fasto at 92, so it's pretty frothy right now with a really steep plus DI here starting to hook. So there's a big multi-day run. You can see on huge volume with increasing volume. This is a big move for ABIL. It got above that 100 and okay, so basically it was in a long downtrend. It got above the middle Bollinger Band and the 50-day simple moving average and the 100-day simple moving average on Thursday, and then Friday it's hard to see. There's a black candle right here. It gapped up and closed above that 200-day simple moving average, and then it had closed at Friday right at that 300-day simple moving average. Well, today it busted above that blue line and it broke out higher. It did close at $10. That's lined up with this close from back here in August. If it could break above 10, you've got this little resistance area here. It would be this 14 level would be the next big level to break. If it can work its way through this resistance zone, you've got this 1250 level as well. So this is another big push well above that upper Bollinger Band. You have the EMA 4 way down here at 634 and the 300-day simple moving average at 602. So the downside risk is if resistance fails to break, the candles work back into the bands. If you look here at the ABIL weekly chart, you can see this super long downtrend. Last week that was the first close above the middle Bollinger Band since back here in August of 2017. And then if you go back here in January and February of 2017, it got above the middle Bollinger Band temporarily, but it failed to hold and pulled back. Same thing with back here in 2016 when it got above the dotted purple line in the middle Bollinger Band. So the whole time for years it's been trying to turn that level into support, and so last week there was a big close above. Now this week there's a break above the 50-week moving average. There hasn't been a candle above that level since way back here in 2015, and so a weekly close above that green line would be super bullish. Okay, so the chart's really heating up here. Look at this volume. This is giant volume for the stock. It needs to break through this August high close. A weekly close above that level would be bullish, above 10, and then you have this cluster of candles right here from June of 2017. If it can get above that, then it's the 100-week moving average at 1581. Okay, take a look at YECO, closed up 38% today. Yeah, this is another stock that had nice follow through. It formed this really long upper wick on Friday. You can see that long upper wick. You could see the spike down today in accumulation distribution on the big pullback on today's long upper wick. So basically on Friday it closed above the middle Bollinger Band. It had all the moving averages lined up here. here, and today it got above the gold and green lines. It's the 50 and 100-day simple moving average. The close today above all the moving averages. It was bouncing off the 300-day simple moving average. Does signal more upside potential. Not only did it close above that, but it closed above the May high close level, which was, you could see all these wicks hit that level, and then also above this big resistance zone from back here in January. So the high close here on the 8th of January was the second big level to break, and so that's the key level to stay above right now, like right around 375. If it were to drop below, then it could get back into this sideways channel that it's been in for the last several months. If it can stay above 375, that would be bullish. All right, so let's look at the weekly chart to see where it could be headed and what levels need to break. And as you can see here, the gold line's the big level to break. Look at all the wicks hitting that level and failing to break. This week's candle did trade above that gold line temporarily, but so far it's failed to stay above. Last week it was above it temporarily and then it pulled back. That's the 50-week moving average at 429. If there's a weekly close above that level, that would be super bullish. That's the top moving average in the weekly chart. That should signal that it wants to break out higher. Look at this super strong multi-month or sideways channel. You can see here it's bouncing off of the bottom of the channel, which is the 50-week moving average, currently at 255, and so it bounced off that level. If it can get above 429, that'll signal it wants to head higher. Now, if it fails to break this 430 resistance level, that's the top of this channel, then that would signal, a temporary top, and then it could come back down to the bottom of the channel. So it's channeling out. Look at the very tight Bollinger Bands. These are super tight Bollinger Bands on this chart. So as you can see here, this is the upper Bollinger Band and the lower Bollinger Band, the purple lines, and so it's trying to break out above that upper Bollinger Band this week. If it could do that, that should signal it wants to head higher. Look at the huge volume spike this week. So yeah, so YECO's heating up. It just has to get through that 100-week moving average. Okay, take a look at INNT. Closed up 39% today. Yeah, this stock made a really bullish move on Friday. It closed above the middle Bollinger Band, which is currently at 1195. You could see the last close above that level was back here in April, and so that was signaling more upside potential. And then today it closed above the gold and green lines. That's the 50 and 100-day simple moving averages. If it can stay above that 1562 level, that would be bullish. You'd want to see that level hold. Now it's hitting resistance right here from April and May. If it can get above this 20 level, that signal wants to head higher. Might work its way back up to 30. The April high close is way up here at 46. Now if it fails to break through this 20 zone, what you want to see is that 50 and 100-day simple moving average hold. As long as they hold, as long as it holds, there should be more upside potential. You can check out MACD down here. It's just really starting to heat up, and yeah, you had a PSAR bull flip on Friday. So after this very long pullback, this is trying to push higher. It is on a 4-day run. We'll see if it can keep the rally going. Okay, take a look at INNT on the 15-minute chart. Look at the strong run. It started back here on the 20th. It was had the tight Bollinger Bands. Look how tight they were. It dipped before it ripped, and then the dip was the little shakeout on light volume, and then it just started heading higher in a steady uptrend. On this candle right here at 315, that was kind of the magic candle. That was the close above the 300 simple moving average. Okay, so that was the top moving average in the chart, and once it got above that level, that was your signal. Okay, this is now trading above all the moving averages. As long as it keeps riding EMA's 4 and 8 support higher, the signals to keep riding. You can see here it did have a little shakeout into the close. It held the middle Bollinger Band, but it's been on this nice steady uptrend, pushing really hard right now. If you see it drop below 1781, that would signal it's cooling down. As long as it's holding 1593, this uptrend on the 15-minute chart is intact. If it did drop below that level, you could possibly see the 50 simple moving average at 1381 tested. Okay, check out GEVO. So yeah, this had the big move last week on Monday and Tuesday. So it had the giant run on Monday of last week, and then Tuesday it went all the way up to 25. I mean, that was a huge winner, from 4 to 25 in 2 days. And then you had, the pain and suffering on the pullback, and so it came down and it hit this 100-day simple moving average in EMA 13 between 8 and 841, the orange and gold lines, and it bounced right off that level. Now today, there's a nice white candle, but it's hitting the key level to break, which is the 200-day simple moving average at 1030. Now, if you see it breaking above 1030, that would be bullish, and then you would have the 300-day simple moving average at 1169 on deck. Now, if the 200-day simple moving average fails to break, then it could consolidate. A drop below 8 would be a red flag, and it could drop down there to that 50 and middle Bollinger Band, the 20 and 50-day simple moving averages. So right now it's wedged between that 200 and 100-day simple moving averages. A break above 1030 signals upside potential. A drop below 8 signals downside risk. Okay, take a look at ZFGN up 26% today. Nice breakout. So yeah, this had big volume on Friday. That was your clue. Look how big that volume spike was on Friday. I mean, the key is how it dwarfs the preceding. That was 10 times average daily volume. I mean, you look here, average daily volume was a couple 100,000 shares, if that, and 2.5 million traded on Friday, and it didn't move that far. And so that was your clue. Many times with these penny stocks, volume precedes price, and then today, boom, big follow through and a nice push through resistance here. And so right now it's coming up and it's hitting the high close resistance level from February. If it can get above that February 14th closing price, it's above it right now, but if it can stay above and turn it into support, that should signal it wants to head higher. Right now it needs to be, trading at 9 and higher, and then you'd be looking for a possible run up to $10. That was the high from March. That would be the next key level to break. This was a good move above resistance. You can see here this was the high close. It broke out of this channel. It has to get above 9 to head higher. If you look here at the ZFGN weekly chart, you can see here that it's back above the middle Bollinger Band, the dotted purple line, and it's hitting the key resistance levels here. It's hitting the February high close, and then you have the back here in 2016 the January high close, and so it's hitting those two key resistance levels. If it can close above for the week, if it's at 9 and higher, and because this candle will not set until the closing bell on Friday, if it closes at 9, that would be very bullish. If it turned that level into support, and then it could possibly work its way up to the 200-week moving average at 1325. If it fails to break this 9 resistance zone, it could signal a temporary top. This is a nice move after a big pullback. We'll see if it can push higher. Okay, take a look at RAD here. This is Rite Aid. Closed up 4% today. This is a really nice run. Look at all these white candles in a row. Huge run. Basically it bottomed down here in the first week of June, and it's just been heading higher ever since. It's pushing really hard right now. It's got this February resistance to get through. If it can bust through, you have the 300-day simple moving average at 226 is the next big level to break. The next big simple moving average. If it fails to get through this 210 to 215 resistance zone, the big thing is that it just keeps holding EMA 4 at 202. You can see all of these white candles here are above that level. Once there's a close below, that's when it could consolidate and possibly take a breather. The big thing to hold now is this red line, which is the 200-day simple moving average at 186. As long as it stays above that level, it could keep pushing higher and work its way back up to that 300-day simple moving average. Check out the big volume on Friday. Huge volume spike on Friday, so we'll see if it can keep pushing higher. Okay, take a look at PLG here. This is the platinum group metals, closed up 18%. Yeah, this chart's interesting because it closed above the middle Bollinger Band today. You can see all of these candles are below this dotted purple line. You can see it tried to get above that level back in March, but it failed. So you'd have to go off this chart to find the last close above the 20-day simple moving average, the middle Bollinger Band, the dotted purple line. And so if that level can hold currently at 1007, a new uptrend could begin. So that would be really good if it got a new uptrend going. There was a PSAR bull flip today. The green dots are below the candle. SAR stands from stop and reverse. If this middle Bollinger Band holds and it stays above this 10.7 level, the 50-day simple moving average at 14.9 will be the next target. It has to bust through this upper Bollinger Band at 12.3. Notice the big volume spike behind the move today. Like I said before, volume precedes price, so we'll see if that happens here with PLG. Keep in mind it has to stay above 10 to remain in play. If it dropped below, that would signal more consolidation, not ready to go. Okay, take a look at VLRX. This had some good volume today with 28 million shares traded. It's back above 50 on RSI, so it's heating up back above the 20 oversold level, bull cross on plus DI. You know, it has all these things going for it, but it has the black candle. The open was up here at 195 or so. What was the open? 194 was the open, and then it pulled back, and so it did close below the 50-day simple moving average at 165. That's the big level on this chart. Above 165 is going to signal upside potential. If it 165 and the 50-day simple moving average turn into resistance, it could come down and fill a gap. There's a gap between high of day on this candle and low of day on this candle, so a drop down here to just above 140 would fill the gap. So we want to see that 50-day simple moving average turn into support. If it does bounce and it gets back above that 50-day simple moving average, then, and I say bounce on the intraday, this is this is something the bears are actually in control. It would be bearish on the 15-minute chart if I showed that right now. And so yeah, if it gets back above that 50-day simple moving average, that level needs to turn into support, and then it could work its way up here. There's this gap between high of day on this candle and low of day on this candle, and so you could see it started filling the gap. A run up here to 250 would fill the gap. So yeah, keep an eye on it. We'll see if VLRX can get a reversal going. If you look at a reversal or can get something good going, the reason why I say that is look at the black candle here. When it formed the black candle in May, it pulled back and consolidated, so that's not the move bulls want to see. Okay, let's look at SXE here. Closed up 11% today, back above 50 on our side. It's been a tough level to stay above, so if it can get above 50 and hold, then the chart could heat up. Right now it's hitting the key level to break. That's the 50-day simple moving average at 163. You can see all these candles here had been failing to hold that level, and it keeps pulling back. Once it turns that level into support, and then you'll know that it's really ready to go, is once it gets above this gold line here. That's the 100-day simple moving average at 170. That's going to be your big signal. It's ready to head higher. It closed above the 100-day simple moving average back in March, but that level failed to hold and it pulled back. And so we're going to be looking for a bullish change in trend. What makes it interesting, you know, not only just the close above the middle Bollinger Band at 158, is this huge volume spike. So big volume came in today. It closed above the middle Bollinger Band. If it can get above 164, that's going to be your signal. Okay, it's in play still, and then if it gets above that 170, that's when it could really get moving. Now, if it dropped below that 158 level, that would signal downside risk. Okay, let's look at SDR here. This is the last stock in this video. This doesn't have very big volume. So it's kind of the opposite of VLRX over here when you've got the 28 million. But yeah, keep an eye on SDR, even though it's a thinly traded penny stock. I know you know people like these. It's back above 50 on RSI. Fasto's back above 20. You've got a bounce after a multi-day pullback. You could see all these red candles in a row. After 6 red candles in a row and a couple of black candles, there was a nice bounce today. So, and it did close above EMA 4. If it can stay above 163, the big level to break is going to be this middle Bollinger Band at 171. If it gets back above 171, then it can get an uptrend going. Now, if it pulls back below EMA 4 at 163, that's going to signal continuation of this downtrend. A new downtrend is starting here with the close below the middle Bollinger Band on Wednesday of last week. If that EMA 4 remains resistance, the downside risk is it comes down here to that 50-day simple moving average at 140. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, come check out the chat. All right, thanks.